Are you guys ready for another round of pre-market prep, the number one morning show to get you guys ready for the trading action? Let's dive into today's topic. We're going to talk a lot about what's going on right now in all these earnings. We'll talk about what happened with Nancy Pelosi's visit to Taiwan. We'll take a look at what the Fed talk out there and what you guys should be watching. It looks like it's going to be a Fed talk kind of day. Concerns on consumer credit. We'll take a look at some layoffs in Robinhood. Then we'll get into all the earnings. We got a lot to talk about. We might not be able to get through all of them, but I got like 10 earnings report to knock out here. And of course, we do have economic data today. Service PMIs at 9:45, factory orders at 10 a.m. Everybody's watching also the treasury yields. We'll see what happened. We got another special guest like always. We got Jonathan Corpina from Meridian Equity Partners ready to dive on into today's show. Welcome to it, guys. Pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, all my lovely bots out there, from my man Elon and from my man Joel. Let's bring them on here. Joel Elconin, Dennis Dick. Let's get it started. Welcome to the market that, at least like Joel says, this thing doesn't want to go down, at least for right now.
And it doesn't want to certainly go up either. We are working our way into a trading range, and what way are we going to go? Are we going to, look how tight that, I do have my screen share up. Look how tight that little channel is, man. For 4 days, 40.80 to 41.45, just hovering near the highs. And what's going to happen? We're going to find, I don't even know if we're going to find out today, because we're stuck back in the middle of the range. Pre-market low down at 40.84.50. That's a good number. We know we got 3 other lows in that area. And then on the upside, what more could you ask for than a triple top? And if you want to include the June 9th high, you got a quad top. So let's see, let the market work its way out of this congestion period. Crude coming down to 92.50. That's where it should bounce. It has up $1.54, 95.91. Gold in the red by 870. That was a big old rally for gold. That's at 1781.80. Silver trying to stay in the 20 handle, down 11 cents at 20.02. Bitcoin just moseying its way up here, up 455 at 23,455. And that's Ethereum futures, which I may not even give it anymore. They're up $30.50 at 1669.50. Well, Dennis, I mean, sometimes, the market just takes a little breather, huh? And that's what it's doing here. It can't make up its mind. What's going to shake us out of these doldrums, out of this trading range?
Well, it's the battle between the bulls and the bears, and obviously we have lots more information coming. We've had some earnings coming in. It's going to be like I do think we're going to get a rug pull here eventually, and I do think it's going to be from China. But we don't know the timing of that. And right now, there's still FOMO. FOMO's running rampant. You can look right to, I know we're going to go out of order here, Mitch, but, just the way the conversation flows sometimes. We just go with flow. We have like an order, but if it flows this way or flows this way, the order changes. And, my train of thought just took me. When you have the dash for trash, when you get the dash for trash,
that's
jumping in.
The trash
that's showing you the FOMO. People are now scared to not be in this market. And big days yesterday for AMC again. Obviously, a lot of this being driven by this HKD stock, which we touched yesterday. Just, craziness. It was $900. I said, who knows where this thing goes? I think it ends badly, but it could go to 2,000. It didn't go to 2,000. Went to 2,500. Became the 11th most valuable company in the world. Joel, the 11th most valuable company in the world.
I know. I saw it.
That's how crazy this market is. I mean, we know how the story ends, but who knows the path to get there? The thing's trading with 100-point spreads. So, Eventually, there's a rug pull there too, but who knows? It could go to 5,000. I said he has to go to. It could go anywhere. So it can just do whatever the heck it wants. Maybe it wants to be the most valuable company in the world. It shows how, there's just these pockets of irrational exuberance and just craziness. And now, I mean, we saw it yesterday, with AMC starting. Bed Bath & Beyond had a pretty good day yesterday. You're starting to see that dash for trash. Typically, the dash for trash comes late in the move, though. And you were saying this too, Joel. It comes, we've had the big move. We had all the guns, the mega caps, the growth stocks have all had 25, 30% rallies in July, 9% for the SPY. But individual stocks, like I was talking, the Square I bought, I think I'm up 23% or something in my Square. I bought it 2 weeks ago. So, I mean, these are big moves in stocks. So then you get like, okay, what hasn't gone yet? Or, I'm going to get rich on AMC again. Now that's going to be, that's the mentality. So the FOMO is fully back on. In order for the market to correct, you got to break the FOMO. It's got to be, and Bullard's talking on CNBC, it's got to be some Fed speak. But what would really break the FOMO is a rug pull from China. And we see with the Pelosi visit. So we just touched a lot of topics all in 2 minutes, Mitch. We're flying today.
And we'll let Mitch bring it in. But the thing with the China is that it's going to happen overnight, right?
Oh, yeah.
It's going to be, it's going to be, you're going to be waking up and the SPOOs are going to be down 100, right? I mean, you're not good, and it's hard to position yourself for something like that, and it's also to make that overtake your long-term investment philosophy. But all right, Mitch,
but you can adjust on your long-term investment philosophy. You can always separate. I mean, if you want, and again, I'm just going to say, if you're a full-time trader, you should be somewhat actively managing your investments. I mean, you can separate and you don't have to do that. But, if you're extracting alpha from the day trading, like I am, from the day trading, swing trading time horizon, why not try to extract some alpha from the long-term portfolio as well? So that's why I fluctuate, And when I'm really, really bullish, I'm probably down to like 10% cash. When I'm really, really bearish, I'm up to 50 or 60% cash. I'm sitting here, I was getting, down to 30. So I'm like getting, I'm still not out of the woods. I'm still a little bit bearish, but I want to be some more stocks. I'm still selling stocks into the strength here right now. I've been raising up cash again because I feel there's going to be a China rug pull. I might be wrong. Maybe we continue up forever. It's why I never go 100% cash. Maybe China was just bluffing and they're going to do absolutely nothing. I find that hard to believe. I think there's going to be some repercussions. I think they're going to come suddenly. I just don't know the timing of that.
Well, how will China react to Pelosi's visit? Well, we saw they hit Taiwan with some more trading curves amid, of course, the tensions that are going on here. There was, of course, the sand exports banned, fruit imports suspended, and some fish also being banned. They tried to blame, I saw COVID being mentioned in there, that supposedly they opened a package of frozen fish and it had COVID in it. Well, there you guys see it. They're trying to hit Taiwan on the trading curves and kind of trade hits for right now. We'll see if this actually kind of goes into something bigger, right? I think that's what everyone's watching. I don't think this is the important thing. But Pelosi did pledge that the U.S. wouldn't abandon Taiwan, reaffirming American support. And so it's going to get interesting from here.
I mean, there's still the potential that we have a full-fledged invasion into Taiwan here too. There's a lot of wild cards, a lot of unknowns. But, if you think this was, okay, these were the repercussions. They're putting some, some sanctions or some, trading curbs on Taiwan, what you were just saying, not going to let them bring in the mackerel or whatever fish they have. I mean, this is not. This is just the little, tip of the iceberg here. Mm-hmm. There's no way Xi gives a warning like that to Biden and doesn't follow through with something against the U.S. So I don't think it's going to be in like a physical fight. I don't think we're going to war. I think it's going to be in the trade front of it. I think, we got the supply chain issues is what I think is going to happen. We've had supply chain issues. We know China is a big cause behind our supply chain issues. Every time they close up for COVID for 3-4 days, it affects their supply chain. Well, they could intentionally affect our supply chain now. I mean, in a worst case scenario, they could just, slow down, shipments to the U.S. altogether. We'd have some empty stores. Everything comes from China. So there's a lot of ways that China can make it really difficult on the U.S. without like firing a missile and shooting down a plane. So that's the scary thing. There's going to be a rug pull here eventually. but I don't know if it's imminent. I don't know if it's a month from now.
No way. It's a
So
total
the timing of that nobody knows, but there is something that's going to happen, and the problem is when you look at the big picture here, we're really getting to a point where it seems like all of Asia is just not liking the US whatsoever now. China there's always been some tough relations there, but we know Russia's full on hates the US. North Korea is just going to go with whatever, because they're doing their own thing up there. And now we were like starting a war with China as well. It doesn't add up to like new all-time highs in the market. It just doesn't add up to me. And we've had such a rally back. I mean, some of my stocks, rallied 15, 20, 30% in July. I'm a fool if I don't take some of those gains and then I get the China rug pull.
Well,
so if we go to all-time highs, awesome. But I don't think it adds up.
I think all-time high scenario. I can't.
What you need to be watching for is talk like today. Look out for the Fed talk out there. Bullard on right now. I heard it was on CNBC. He's stating that, of course, that the central bank needs to keep hiking rates and control inflation. He says that I think inflation has come in hotter than what I would have expected during the second quarter. And now that it has happened, I think we're going to have to go a little bit harder than what I said before. That came from Bullard. Of course, yesterday's comment from San Francisco Fed President Mary Daly, also saying that the central bank was nowhere near done with its fight to cool inflation. We also have today Philadelphia Fed President Patrick Harker addressing audience at 10 a.m. And then you'll get Richmond Fed President Tom Barkin at 11:45 a.m. Eastern. So it's a Fed day. Watch out, guys.
The silver lining market, though, will find the reason to buy stocks. It's like I think we're going to climb this wall of worry until we get the China rug pull. I really do. I don't think the market's scared of the Fed anymore. I think the market thinks inflation's peaked. And you know what? I'm with the market. If we didn't have, let's set up the whole scenario and take China out of the equation. If we didn't have this whole, new situation with China, that's come to roost here or going to come to roost, I would be long stocks because I believe inflation has peaked as well. I'm the one that said it 3 weeks ago, for crying out loud, 4 weeks ago. I'm the one that came out and said I'm buying stocks and everybody called me an idiot. And now they're all saying, oh, yeah, now we got to buy stocks.
Well, I didn't think they didn't call you an idiot. I'm going to be on the camp, too.
A lot of people on Twitter
inflation,
did. A lot of people on Twitter did.
You thought inflation peaked earlier than it did. It still hasn't essentially peaked in the data.
Yeah, but you gotta. If you're waiting for the data, you're
missing 30%.
You're missing. Yeah, I mean, I tried to go through this exercise before. Look at crude pulling off highs. Looking at third month, monthly red.
I'm still in the camp. Your
commodities have come down.
Right?
Look at 1280 wheat, natural. I mean, the proof is in the pudding here, right? The proof is in with the commodities, and what the commodities are telling you also have backwardation in the crude. So they're not, the Goldman Sachs comes out with their 130, 135 call. Well, the guys that are swinging hundreds of thousands of contracts are figuring lower prices. So you're right. The inflation thing is one thing. But the China thing is, and we can get the inflation data. We can see it, right? We can see it with our own eyes. The same with China. It's a really big unknown. And when I look at the market here, and I'm looking at the SPOOs right now, and they're just like, they're not worried about China right now.
No, not at all.
Nope, nothing at all. There's no fear in this market.
No fear right now. Just the fear of missing out, Joel. There's only FOMO in this market right now. So that's a bull case scenario. And there is the scenario. So here's what's setting up. If we don't get the China rug pull, we're going to go higher. And you know why? Because that next CPI report, Joel, is going to show inflation coming in. It's in this next one. I'm saying it's in this next one. This CPI is coming down. So, and the market is going to applaud that. So your all-time high scenario, I'll give you the scenario. I was saying there isn't one. There is. The all-time high scenario is China does nothing about the Pelosi trip. Literally nothing. Inflation starts to come into check, which it's going to do. It's following the path that I laid out on this show. We can see it in the data. We can talk about that in 1 second, with credit card balances rising the most in 20 years. So you can see that eventually here, if there's no China rug pull, there's just so much fear that you could go to all-time highs. The CPI comes in, people just get the FOMO going. It's a scenario. There's a possibility.
Yeah,
I'm not with that.
Okay.
I sold stocks yesterday, so I'm not with that because I think the China rug pull comes, and I think it opens a whole new can of worms in the supply chain. That's what I think is going to happen. That's my own thought process. So I don't even think the inflation is the issue, because what happens if the supply chain gets all screwed up again from China, maybe intentionally, is inflation does start to come back up, to Mitch's point. So there's a lot of different balls we're juggling here.
A slight peak of inflation followed by another ramp in inflation. That's what I'm concerned about.
The ramp will come, but let's talk about supply chain gets screwed up.
Before we do,
I like if that supply chain gets screwed up again.
I like Laura's comment. I like Laura's comment in the chat. And Laura's comment in the chat is, right now, the market is telling you that they like what Pelosi did. Right now, that is the message.
I don't
right now.
It's not scared.
Yeah,
it's not scared of what.
We let look at that. We sat back and we let Russia just go into Ukraine and we didn't do anything, right? And now we got a big old problem on our hands. So hey, maybe we're just not going to stand by idle. And
what happens if China does go through and invade Taiwan? What happens to the market?
Kapow!
I think
kapow to our market, kapow to their market. Kapow to the world global markets.
Kapow to all the markets.
Yeah. All right. Exactly. So let's talk about the concern.
And that's because you think you got a chip shortage now. Wait till China gets a hold of all those chips. Well, what do we do? Do we defend it? Do we go in? They're not a NATO country. I don't think we're coming in with our army to defend it. I think it's a whole other Ukraine where we'll give some sanctions, we'll discourage it, but I don't think we're going in there and fighting them.
Well, we already have.
So that's a possibility too. So there's a lot of potential rug pulls. So what we'll say right now, there are potential rug pulls. It doesn't necessarily mean there's going to be any rug pulls, and maybe China doesn't pull any of them. But China's got the rug, and they can decide right now whether they want to pull it or not. They've got some power over there. Don't kid yourself. But let's move in. So the consumer credit, which I just touched on, you can give us some stats here, Mitch, and then I got some comments obviously there too.
Yeah, credit card
Face
balances.
the nation. We should change the name for pre-market prep to Face the Nation.
Face the world right now. We're talking the entire world.
I know.
Credit card
maybe
balances.
We're getting in it. We're getting in a little bit over our head. So let's go to what we know.
That's what we do. That's our job.
I mean, this is exactly. We got to talk
about
it.
Hide under my desk.
Concern for the consumer credit here, guys.
I'm not as good a swimmer as Joel, but I can swim.
Credit card balances rose 13% in second quarter of 2022, notching the largest year-over-year increase in more than 20 years. This coming from the Federal Reserve Bank of New York. And an additional 233 million new credit card accounts were opened in the quarter. Of course, the most since when? The financial crisis, right? The 2008. So not a good sign, at least for the consumer credit.
Let's rewind the tape to the last 3 weeks, which I've probably said this 10 times. The path to hit the consumer with higher rates is the first thing they do is they sell off the toys. The second thing they do is they rack up the credit card debt. Well, we just saw the credit card debt rise the most in 20 years. So that is working. It's showing that the Fed's plan is working. The other thing is they're definitely not buying the toys. Look at Big Five sports goods earnings, BGFV. Look at this one. Look at their projections. So if you want to talk about, not buying toys, obviously BGFV selling all the outside toys. Miss, and then the guidance. Supposed to make 22 cents next quarter to 32 cents versus 89 cents. This is not the place to put your money in the toys. People they don't have the discretionary income to buy the toys. That's what's happening. So I think it's following the Fed's path, which is good news. That's good news, actually, because it's showing that eventually inflation will start to come in from lack of demand. They're killing demand intentionally, and we're starting to see it, and the consumer is going to start to get strapped, and that will kill demand. It doesn't happen on the first interest rate hike. It doesn't happen because you go up a full 100 basis points. It happens over the course of time. It takes time. It doesn't matter if you go up 500 basis points. Maybe you won't make the first payment, so maybe that would work. But, I mean, it doesn't just happen because consumers are just all of a sudden out of money. They've got to slowly get it taken away from the higher rates, from the higher mortgage payment, from, touching here. And that's what's going to happen. And that is what is happening. So that's the good news. And this is why I do believe the CPI data is going to show a reduction in this month. And if we didn't have China, I would be fully long right now, but I'm scared of China.
And
All
but what if they're taking out the credit card loans and they're buying stocks?
They're
And
not, Joel.
They're getting rich.
No, they're buying
the math
NFTs,
doesn't add up.
Joel, it's
math doesn't add
NFTs,
up.
man. It's NFTs.
They're not,
I was being a little
NFTs, all of that
facetious
stuff.
there.
It doesn't
A
add
little
up.
facetious there. Okay.
It doesn't add up.
But I will call to concerns if you guys are thinking about doing things like that. Just like always, we're not giving financial advice.
Oh,
Be careful,
that was a
traders.
joke. Come on, that was a big time joke.
You never know, Joel. Someone might be listening to this and not been able to see you.
Actually, a guy from Benzinga. Remember when he wrote that article, Dennis?
Exactly. That's not.
No, but he was like how you should mortgage your house and
buy NFTs.
No. This was back even when we were in the old office.
I hope he got fired.
I can't remember who it was. He ended up going on CNBC too.
Yeah, you were talking. I do remember that.
That was
mortgage the house to buy stocks.
Yes.
Well, I heard Michael Saylor sailed off, but let's not get into that conversation.
Oh yeah, Michael Saylor. No, we want to get into that conversation.
Dennis. No.
We're going out of order. We're off the rails. This show is off the rails. It's Ozzy Osbourne's Crazy Train today. We're
so what happens when you have a Dennis Dick
MSTR.
and a Money Mitch in one show? It's just
you did that one. You the one that mentioned Saylor. That wasn't even on the list. Get the Sailor out. He's gone. He's leaving.
He steps down?
He said he's going to just hang out with his Bitcoin.
He said, I'm sailing out here.
He's building his Bitcoin house and living in his Bitcoin, and eating his Bitcoin food. He's out. He doesn't need MSTR. He has Bitcoin.
Deuces and mimosas. That's what I'll say. He said, I like mimosas over Bitcoin, and I'm out of here. So yeah, he stepped down. It's funny because it dropped pretty big in the after hours because of that mention, but it's recovering here at the 280s. We'll see if it's able to hold that level there.
Whoa. The
sign of concern in Bitcoin is through the roof. I think if you're thinking this is the bottom in the Bitcoin winter, I'm not in that camp.
What are you thinking? Mitch, give me your Bitcoin prediction.
At least 2 more years of negative catalyst coming from this. There's still going to be more companies that I think blow up from this. MSTR could be one of those that could blow up from
MSTR.
this.
If Bitcoin goes to like 10,000, MSTR is in a world of
That's
pain.
why I'm saying be careful. I'm not in that camp, but I'm going to definitely avoid seeing the pain, and I'll wait till it dies down. The same thing I'm waiting for the market. Let's get out of this. Let's do a quick mention of OPEC Plus output boosting by 100,000 barrels a day. That's just a drop in the bucket of probably what's needed to really help the supply issues for the U.S. Of course, we'll continue to see how oil develops today to see if oil gets a spike or not. Let's take a quick look at the futures, Joel.
Yeah, they're popping. They're popping.
There you go. Yeah, a lot of this based on the fact that at the 100,000 barrels isn't enough to catch up with the supply that's needed.
Yeah, I mean, the bulls are firmly in control here. 92.50 came down here, just a tad below it, just above it here. You hit it the last 2 days. You're actually knocking on the door of yesterday's high right here, 96.47. So interesting. It's spending, another thing technically is though it has, except for this high here, the rebounds have been they've been lower highs, but we'll see. Up $1.72 today. Keep an eye on 96.49 because things open up after that for a couple bucks. But that's the way crude trades.
All right, let's finally get into these earnings that everybody wants to hear about. First one up, of course, the favorite that is AMD. Let's talk about it here. Adjusted EPS coming in at $1.05. Hold on, let me get this rolling through the bottom. It takes up too much of the screen there. EPS coming in here at $1.05, beating the $1.03 estimate. Sales at $6.55 billion, beating the $6.53 billion estimate. AMD sees Q3 sales at a low end of $6.5 billion to $6.9 billion on the high end. The estimate was about 6.82, so raising that higher end there, but the lower end there, of course, coming below that estimate. So they just gave you that range, and they see full year 2022 sales at $26 billion. High end of $26.6 billion when the expectation was $26.18. So really not off too much from the guidance there, but they did put a lower end there.
Okay, full disclosure, I sold more of my AMD right before the print. I was like, am I going through the print? Am I not going through the print? I've just watched my entire AMD holdings, go from $70, and we know I bought more at 76, and I sold that, the extra stock that I bought. I sold a little bit of my other stock as well, at $99 yesterday, right 2 minutes right before the close, because I didn't feel like going through the print with it all. Still have a piece. I do want to reload. I do want to rebuy AMD at a certain point in time. I do believe people could come in and buy the dip on this here today too. But again, my main catalyst here is I'm worried about the whole China situation. Although, if obviously we get an invasion in Taiwan, that could be actually a catalyst here. So there's a lot of different things to think about, a lot of balls to juggle there. But AMD is a loved stock. I think this has the potential to get bought this dip. I am long, still a little bit of AMD, but it's been a big run too. So, and it's not a cheap stock.
You've done a nice job wiggling on it, because I know
I was
you
dead wrong with my
know.
original purchases. I was buying obviously before the world was imploding here, at least before we had this huge sell off, and my second purchase was good. The second purchase, the never frown average down, Kathy style. I get the second one on the head. I think it was $76 that I bought. So that brought my average cost basis down substantially to turn this, losing trade, almost into a winning trade overall. So, and it wasn't a trade. It was still long-term investment, which I've still got some shares. So I don't plan on getting rid of AMD. I want to hold some shares, but I had to an oversized position after the second purchase. So I brought it down to a normal size position. Now it's an undersized position.
40% rally off the low.
Just a huge rally. I'm
40.
I'm selling the rip.
Yeah, if you think about it, I mean, no matter you almost feel like no matter what they would have done, this thing. I mean, after rallying 40%, off the low, getting back to triple digits yesterday. This is a tough one. Throughout the high, throughout the low. I don't think we're going back to 90, and I don't think we're going back over 100. I think Triple D, if you want to be super patient on this one, maybe pick this up 86, 87, something like that. Like, let them pound it for a couple days, come into this 85, double bottom at 85, and then that's also the 50% retracement. Things cool off a little bit, and then build another base for another 30-point rally.
Hey, well, I did want to mention that a lot of people were kind of confused on why AMD came down here, and I will mention that this earnings season, at least for me, has definitely been illogical. Like, if you try to make logic to the earnings, you're going to be ending up scratching your head a lot of the times and wondering what happened.
To your point, Mitch, fantastic point. You could be like an insider and have the
entire report.
The entire report before it gets released and get your butt kicked. That's how weird this earnings season has been, because there has been misses and significant rallies on misses, and there has been beats and significant sell-offs on beats. It has been one of those earnings season where expectations have driven the bus. We always talk about what's driving the bus. It is earnings expectations driving the bus. And the expectations for so many stocks in the middle of July was in the gutter. Now those expectations have started to come up a little bit. Like to your point, Joel, AMD 40% rally off the lows. I mean, okay, well, now they beat, and it's like, oh, they're selling off, but they beat. Well, they're buying Google last week and it missed. Big difference between now and 2 weeks ago.
That's why I stated also in my tweet out there, I said, know the environment you're in when your stock is reporting is probably 10 times even more important than the actual numbers that get reported. Especially when we're in an environment like this where the market is essentially driving a lot of the stocks. Let's go towards PayPal's earnings now. This one's interesting here. Reporting a beat here at 93 cents, beating the 86-cent estimate. Sales at 6.8 billion, beating the 6.78 billion estimate. Sees full year sales at 27.85 billion versus the 28.18 billion estimated here. They did raise their full year EPS guidance to $3.87 on the low end to $3.97 on the high end. The expectation was at $3.85.
Should we just buy whatever Elliott buys when it gets mentioned? I mean,
at least for right now, it seems like.
Is Elliott hotter than Buffett? I mean, Elliott is just monstrous right now, Joel. I know long term Joel doesn't like Elliott, and you're on mute. But holy mackerel, we found out that Elliott bought PayPal when? Like a week and a half ago, and the stock was $80. $76, I think it was when it came out, and it popped like 81 that day. And then we had the pullback afterwards. That was such a buying opportunity. And now, boom, boom, boom. Pinterest, PayPal, Elliott has turned very hot here, Joel. Joel, he's still
muted, Joel. I tried to let him know in the chat, but
that's okay. Joel does the mute trick. He used to do it like once every show, and he does it once a week now, so he's getting better.
He is. He's on fire. I mean, the only thing, the initial surges, the Western Digital, he hasn't been so hot on, but the pins. I mean, you talk about having the report, right, and knowing what's going on. Well, you didn't know Elliott was going to come in, right, and announce that stake. PayPal.
Well, we did know. We knew Elliott like 3 days before.
He knew it, but didn't he add more? Did he add more to it?
They said they came and said that the biggest shareholder now, and that was what it was.
Yeah, so they did that again.
Yeah.
Here's the stock. I just think you're getting a normalization in this stock, right? You had your pandemic low, and then why the heck did we go over 300? Everyone's, and then it came in, and it just came into a reasonable valuation, much lower expectations. And now it's just, it's going to perhaps be a little bit more of a smoother earning curve. 102. I was looking at this thing last night, and I'm like, where's the resistance? I'll just give you this 102, the pre-market high. Seems to be stalling here a little bit. On the dailies, you don't have much there. Yeah, I guess you got I go 101.95, 102, because that's the pre-market high. But if you're looking for more, your April 19th high was just under 105. Where to buy this on a pullback? I will leave that to Mitch and Dennis.
I think you can, in hindsight capital is 2020, but as much as the ARKK 2022 low is in, the PayPal 2022 low is in. So now it's a matter of you get pullbacks. You're right, Joel. This it was a growth stock with an unreasonable valuation. It sold enough that it became a value stock with a reasonable valuation.
Believe it or not.
I mean, they were even moving it around in the S&P indexes, I believe. Weren't they on the
one? Really?
I believe PayPal moved around, and maybe I just made that up or jumped it up, but and sometimes you confuse them. When you start getting older, you can
they should
with reality. But in any regard here, $68 on PayPal was an absolute steal. It just got too low. The PE down there is what, 13, 14? What's the PE on this thing?
Did it really get that low? 13 or 14?
The PE was 15 last time I looked, Joe. 15 or 16. So what is it now? Let's go to our trusty Benzinga Pro. Mitch, it's a race. I used to do this with Spencer Israel. Race, details, PayPal. What is the current PE?
That's the
come down a lot. I believe the current PE
I have right now 23.
So it's come up. So maybe not get down to 15. It got in the teens. It got
the industry teens. Average, to point out there, is 13. So in the 15s, it would be really close to that industry average. So seems like a good bottoming area.
Sometimes I wonder where they get these industry averages from, what's included in those, because I don't think MasterCard don't have no PE at 13. What's the PE on MasterCard? Maybe it does.
Who knows? Who knows what's included in that industry average? I would have to take a look at what's all the stocks that are included there.
Last time I looked, MasterCard.
What I would call out on PayPal is that you're going to start seeing a lot of people start calling kind of bottoms on stocks. So I think that what you also got to be looking for is some pullbacks. Don't get too extended on a lot of these, because like we just pointed out, it's been a big move already. Where does it pull back to? That's what we need to kind of pay attention to. And also, do we get more negative catalysts in this market, or do you start seeing a bottoming? One thing I would pay attention to is ARKK. I've been talking about that low there that it keeps rejecting at 44. Now we're back into the 47 and looking like we're going to take out the highs there that we had on Friday. So I'll be looking at that high to see if it ggets taken out, which is 49.34.
All right, let's 3 highs at that area.
Yeah, they're. If we take out that, it's going to be looking like Grove City, baby. I know Kathy's going to be singing in the streets. So let's keep
long PayPal still.
PayPal, I think, is definitely still included. Let me just check.
I don't know if she is actually. The ARK isn't up today, and you'd think if she was, some of her funds would be trading higher. I guess
no. I'm actually.
I'm not sure if she's got it anymore. It got the
PE
got too low for her.
She didn't like not an ARKK. Yeah. It wasn't enough growth.
No, she doesn't like low PE. She only buys high PE.
Let me find something.
Not enough growth there.
Why are you supposed to make something with a PE of 13 or 14 or 16? You can't make money on those stocks. Got to buy PEs of 90.
We got Jonathan in the background. Spencer,
Jonathan.
Yeah, let's bring
Jonathan
him
Corpina.
on here. All right, let's get Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. Welcome back, Jonathan.
Gentlemen, good morning.
Good morning. Let's go ahead. Let's dive on in. Joel, take lead.
Man, oh man, I know you've been in the background here and listening to what's going on, and give us your assessment of this rally. I mean, you're down on the floor. You see the order flow. It just seems like they're looking for stuff to buy. I mean, and it kind of feels like you have this like rotation where, okay, well, yeah, we're still buying value, but yeah, we're going to buy some growth stocks too. So what are you seeing on the floor? What's the floor view?
Definitely we're seeing that there's money on the sideline that wants to come into this market. It's just a question of timing. And let's just back up a little bit. We go through a global pandemic. Markets get smoked in 2020, and we saw the V rally that occurred there. I don't think we're going to see a V rally here, but certainly living through that in a very short period of time and very fresh in our memories, there is that feeling that this market will rebound from it, but it's going to certainly take time. The wall of worry, the worry headlines are certainly in our face, and they continue to grow, right? We had Taiwan headlines yesterday that were able to put pressure on our markets, but that was a very quick news cycle. They've got videos of Miss Pelosi waving goodbye and getting on her plane and flying to South Korea now. So that cycle is over with. But the money has been on the sidelines, and every time we see the market rally, we don't find it chasing the market just yet. It's more of a pause delay of getting back into this market. So we're seeing this 2 steps forward, 1 step back activity that's happening here. But as you guys were speaking earlier, the economic data that we're going to get this week and continue to get isn't going to be as positive or strong enough to get us where we need to go. Earnings season numbers are coming in okay, slightly better, but the expectations moving forward, those are going to be somewhat tepid. And then we continue to get our geopolitical headlines that are going to put pressure on our markets. I mean, just talk about what's happened in the last 24 hours, China, Taiwan. If there are escalating tensions that occur from here, the ripple effects, Dennis, I think you were saying that earlier, the ripple effects of that would be tremendous as far as supply chain, not even as far as, U.S. involvement. Where do we step in? How do we play in this whole thing? So that is certainly something that's playing in our mind. But in the short period also, let's look at where our market has come. S&P over 4,000. I know it's just a psychological level to get through, but we've gotten through there. We're staying above there. Looking at the VIX coming back down, traded as low as 21 and a half, staying sub 25 at this point, I think is important. And I think overall mentality is that this market and our economy will get better. It's just going to take a longer period of time than expected.
So I want to ask you, Jonathan, with all these, and obviously a lot of concerns that are out there, we could go to China, you can go to still inflation, you can still go to higher interest rates, you can go to the possible recession. With all these concerns out there, we've climbed this wall of worry for the last month. Do you think we continue to climb the wall of worry, or is it time for a pause and actually some of these worries, turn into fear?
The fear has been in this market. I don't think the fear is as strong as it's been recently. We've worked through interest rates. We've worked through mortgage rates. We've worked through the Fed and the Fed rhetoric that we continue to hear. So I do think our trend is going to be higher. There will be some soft periods, unknown headlines that would put pressure on our market. But I think overall, getting through this summer, somewhat this lull period of July and August where there's low volume, higher volatility, getting through these 2 months, 1 month is behind us already, is going to be important. As we get towards the end of the third quarter and beginning of fourth quarter, more activity is going to come back and more volume to stabilize this market. Money on the sideline is going to be able to be allocated back into this market as the calendar gets shorter and shorter as the year moves on. It's going to be forced to getting back into this market. So I think overall the trend is higher. We have weathered a lot of storms. We're going to have to continue a few of those moving forward, but I think overall the sentiment will push this market higher.
Well, Jonathan, I'd have to ask, if you put it on an innings basis, how do you feel this bear market is?
I think this bear market, we're at like the 8th inning, top of the 8th. I do think that we have some time, like I said before, to get through this. And just look at where we are today, right? S&P's down 14% on the year. We were down 22, 23%. So
Yeah.
just from a Main Street portfolio, opening up your statement at the end of the first quarter, second quarter, and then will soon to be third quarter, that trend is moving higher. We are going to continue to fight and talk about interest rates and on housing prices and mortgage prices. We're going to have our geopolitical tensions. We're going to have these headlines, that cycles that come up like we just did with Taiwan. But overall, I do think our economy is strong. It is strong enough to weather these storms that we're fighting right now. And just another thing to continue to throw into the mix here, as the calendar just moves on and on and on, we just keep getting closer to 2024 election, political cycle. It's going to be once we get into January of next year, that's going to be a very hot headline for most of 23.
Well, Jonathan, if we're in that eighth inning or the top of the eighth inning, where should we be looking that's going to first rally? Is it in growth? Is it in value? Where should we be watching?
I think from a longer term perspective, we have to look for growth opportunities. We have to look for growth stocks. We've seen a lot of pressure and a lot of volatility in energy. We've seen the financials certainly get battled around with interest rates. If you're looking for a safer area to get into, I think you're going to have to start looking for more of those growth opportunities to play it real safe. Those dividend stocks that pay out really well, that lets you sleep better at night, is somewhere better of an opportunity. But I do think there are some still bumps in the road, but from a longer term perspective, as we get closer towards the end of the third quarter, fourth quarter, we're going to see some more stability in this market.
Do you think that the pendulum's just swinging too much too fast? Like we were like, okay, we're we're uncontrollable inflation. We're going to go 3 quarters. We're going to go 3 quarters, a point or whatever. And then from the tone of the last Fed meeting and the way the bonds, it's like he's a dove. That would inflation's over. We've defeated inflation. We now are in a recession, so we got to start lowering rates. I mean, isn't that really just to me, to you, a little bit too quick of a pivot? Aren't we somewhere in between there?
Yeah, doesn't the pendulum always swing too far too fast, right? We talk about markets being overbought. We talk about markets being oversold. Yeah. And we talk about just overreactions to what's going on. I mean, historically over time, look at how our market has, or how our economy has survived all these major disastrous headlines and economic cycles that we've seen. So yes, I think the pendulum has swung too far. You have to let things play out on their own, right? I mean, in time, things will find their space. It's kind of like market and stock prices. The price is the price. The market will find the price and dictate the price. No different than our economy. Our economy will weather some storms here and find where that right parameter is. So I do think the Fed, they have the ability to play, to have the cards, to see the cards, and play whatever hand they want when they want. There are times when they hold their cards way too long and keep them close to their chest. There are times when they overexpose themselves. They do play catch up most of the time, and then once they start playing catch up, the market reacts in a way towards that, and then tries to anticipate what the next moves are. So I think the Fed has certainly made moves. I don't fully disagree with their moves. I disagree more with the timing of their moves. They could have piecemealed some of their rhetoric into our markets and our economy, but they've been swinging their bat pretty big. I think it's time now for them to somewhat take a step back, let the market and the economy run on its own, and let us kind of get through the next few months.
And, I mean, I'm trying to keep the bullish cap on. I think that, I kind of like the way we're setting up now. There's like a line in the sand, at least for the S&Ps here, 40 points below here. And there's a roof on there too, right? 3 tops in a row. The one thing we were talking about this earlier, in the show that kind of pulls me off the bull train a little bit is that, it's this the way it's these FOMO stocks, or this AMTD and triple BY. I mean, we all know what the results were of that kind of price action in 2021. It took some time to matriculate. Well, how do you observe that? Is that just something that us old folks are just going to have to deal with, that there's going to be short squeezes, that there's Reddit, that there's these kind of things? Or is that one of a warning signal, something that we can that we can focus on?
Yeah, I think we were brought up in the business on fundamental analysis and technical analysis, and this is a whole different category here of FOMO stocks. Those stocks are going to swing the way that the activity is going to push them, whether it's coming from institutional investors or retail investors or Reddit investors. That activity since COVID has been new to our markets. It's not going away. It's going to stay here, and it's just part of our market activity. Fortunately or unfortunately, whichever side of the trade you're on, that's not going to work out well for a lot of people. It just will play itself out. You will see people get hurt. You will see short squeezes occur. You will see stocks that have significant percentage gains in a single day and then topple down right after that. That will flush out all the newer players into this market, or the amateurs who just want to get on and start betting on what they read online. So that activity is here. It needs to be regulated in a different sense. The technology that we have today and that continues to grow, our rules and regulations aren't up to speed with that. So there's going to have to be the continual process of our federal government to keep an eye on that. But those stocks there, it's hard. It's fun to watch. To get wrapped up in them is difficult because you watch some of these stocks move on no news, on no activity, and actually poor performance moving forward. So, expectations moving forward, but yet stocks move 20, 30, 40, 50%. So I watch them kind of like a comic strip, but I try to stay away from them.
Well, Jonathan, I have to ask you about energy because I think it's going to be a big eye on inflation, right? Do we get a peak and then it all of a sudden rises again? How do you feel about energy, especially oil, going into winter?
Yeah, you look at oil prices and the spike that we've seen in that. I saw a headline this morning. New York gas prices are getting close to that $4 a gallon level. And people are gonna cheer that on, forgetting where we were a year or so ago. That certainly is going to play heavily in the minds of investors and on Main Street. What I do like about oil, just watching it, is that you see the effects of that immediately, right? Oil prices rise. You go to your gas station in your local neighborhood tomorrow or 2 days from now, and you will see that impact immediately. It's something that everyone can relate to, and I think that's why we have our president discussing that so openly and speaking to the American people about inflation and prices and how that's affecting them directly. I do think we're going to need to get some better cap on oil prices and how it's affecting everyone. We talked about summer travel, driving, airline prices. The airlines have hedged out a certain amounts of months in front of them. The beginning of the summer season, I think the hedges were in line with prices of where they were 3 or 4 months ago. We're starting to see those hedges now, the back end of those hedges, catch up, and ticket prices for airlines are starting to increase. Hopefully, with the way oil prices are trading now, we'll see a decrease in that as we get towards the end of the year. But summer travel, driving, and then getting towards heating oil towards the end of the year, we're going to need some sort of stability there. I do think the actions that our government has taken in a very short period of time, albeit might mask some of the problems, will help some stability here. It's going to be, what do we do in November? What do we do in December? Can we keep oil prices in an area where it's palatable for Main Street Americans for their heating prices and their gas prices?
We'll see if we get the stabilization that you're referring to there. We'll see what happens, Jonathan. Thank you for coming on today.
Gentlemen, have a great day. Thank you very much.
All right, let's go ahead. Let's keep going. We got a couple more earnings stocks to talk about. We got a lot to talk into. We went to AMD, PayPal. Let's go ahead and touch one that Dennis really wanted to talk about, because this is also knowing your environment. Let's go to SolarEdge Technology, SEDG. And I'll give you guys the numbers right quick here. If I can find them here. There's so many numbers I got. All right. EPS coming in here at 95 cents, missing the $1.39 estimate. Sales at 727.8 million, beating the 725.05 million estimate.
I mean, it is a miss here, so the stock's trading down on that, but you also have to consider, even if they beat, it wasn't setting up well because you have ENPH, which just set the bar so high. ENPH making new all-time highs. How many stocks are making new all-time highs? This is all driven from their last earnings report. The direct peer for ENPH is SEDG. So when you enter the earnings season looking at SEDG and saying, oh, it's going to be good too, I'm going to buy this and make money, you got to think about where the bar just went. The bar went from here to here because of ENPH. So can they get over that higher bar? Well, they didn't even get over the normal bar. So obviously that's why it's getting hit. But, you know, it's all risk return analysis. And I like to trade earnings reports and sometimes try to make a call going into earnings. A lot of times I don't. But, you know, in this case, it was going to be difficult for SEDG to go up no matter what because it already had such a big run and they hadn't even said anything. Yeah, it ran up 75 points off ENPH, and they didn't say anything. So, I mean, it was up 40% in 4 days off of ENPH's report. So the bar just super high. But again, you know, even the earnings weren't fantastic. So maybe it was going to go down no matter what. So maybe it's not the best example. But in some cases, in all cases, it's all about the bar. So when you're trading earnings, it's not about the numbers. It's about the bar. You know, why does AMD sell off on a beat when we see, you know, Microsoft or I believe it was, you know, Google last week rally on a miss or, you know, and that's this about the bar and understanding that the bar has now raised up. I mean, because we've had the significant rally, the bar has now all of a sudden moved up. You're not seeing them automatically come and buy stocks on bad earnings. Some of them are staying in the gutter. Look at Match today, down 20%. Bad report, hit. I mean, and, you know, rightfully so. So a little bit of rationality comes back into this market as that bar comes back up. The bar was just so low 2 weeks ago. They could pretty much be buying any stocks, even Walmart, you know, the flat out misses, you know, and boom, they get it all back. I mean, Snapchat's a different story. It hasn't really bounced back, but smaller company that, you know, the market cares about. But obviously we know they got TikTok problems. But I mean, it's all about that bar.
Well, one that had, I feel like, the bar lowered and it helped it out was SoFi. SoFi for my
Can I just say one thing on SEDG?
Yeah, of course.
Looking at this chart, I see it down 33.81. It's gonna trade between 300 and 340. It's gonna cut maybe, I don't know when, but it's going to do some digestion period in here. I don't think it's going to go straight down. I don't think it's going straight up, but it's got some work to do. And between, I think you get up 340. That's not quite the gap. And then where do you buy this thing on a dip? I mean, yeah, you can rely on the pre-market low today, which is, well, you can't rely on anything. But the pre-market low is 322. Looks like it firmed up a little bit ahead of it. But I don't know. It's when stocks have, you know, that kind of move and get near the all-time high, then tumble. I just think you got a congestion period coming up.
Another consideration too here, there's so many people that are inclined to use their 2020 strategies in 2022, and people are waiting for the breakout and they're waiting for these stocks and they're like, oh, okay, I'm not going to buy a stock in a downtrend, you know, because, you know, that doesn't work. But now they're starting to turn and they're starting to go up and now they're coming in and buying them. Those strategies worked in 2020. You've got to adapt to your environment. What has worked in 2022 almost perfectly, nothing's perfect, but, you know, has worked so well, is the fade trade. It has worked in both directions. You know, we've talked about the buy the dip, the sell the rip. I mean, during this earnings season, Mitch, this fade trade has been pronounced. I mean, the stocks get hit on the earnings, then they turn around and rip them higher. I mean, Walmart, think about, you know, the boom. And then the other way, too, we've seen it with good oil earnings where they've had good reports and they've turned around and sold them off. So, I mean, to turn around and say, okay, well, now this stock's looking good because it's breaking out. This hasn't been a breakout market. This is not
100%.
So, I mean, you've got to replay. And one thing I've learned in my 22-year career is what works yesterday will not work tomorrow. It's all about changing and figuring it out. And I think my edge and why, I've been successful and making money on a consistent basis for 22 years is I'm always kind of changing to the environment. And once you've been in for 22 years, you've seen a lot of the environments before. It's like, oh, I've seen this before. I've seen the dash for trash come in the late cycles of the bull run. People are talking about what inning are we in the bear market? What inning are we in this little recent bull market that we just had for the last 5 weeks? Are we in the 8th, 9th inning of this recent bull run?
Yeah.
We might be, maybe not. But the dash for trash scares me. When I start to see that, that's usually late cycle stuff. So it's all little mini cycles, and as traders, we look at the mini cycles. As a long-term investor, you can look at the big picture. Big picture I don't like right now. But I mean, as traders, you've got to look at those mini cycles. So coming in and saying now stocks are looking good after they've moved up 25, 30% in 3 weeks is the opposite of what you should be doing.
You're doing it wrong.
Backwards.
So what I would say there is there's two things also that Dennis said there, the cycle, but also keep in mind the patterns that you're seeing, and taking data on this can definitely help, because if you have multiple tools in your tool belt, you're going to be able to go to those tools in certain environments. To me, that's what I've been doing. Is I used to trade more breakouts, but lately I've been trading more inside the range and looking for reversals.
Yeah.
So like, let's say a hard dip and then catching the dip there, going back up through the open and then selling it at the highs, and not looking for continuation moves. That has not worked well for me, at least in this market. If I'm looking for continuation, a lot of times I end up break even. And so I'm going to be continuing to look at that. And I think that everybody should do that. Look at your patterns that you play. How active are those patterns working, and when are they not? Because you're going to find there's times when certain patterns do better than others. And it's so important to catch that. All right, let's keep going. Let's take a look at the SoFi one. And then just shout out to my man, Spencer. This is a Spencer stock. SoFi Technologies here. Let's take a look there. I feel like it had the bar lowered, so it didn't make it bad. EPS at a loss of 12 cents, beating the loss of 13-cent estimate. Sales at 356.9 million, beating the 346.48 million estimate, and raising full year 2022 sales guidance.
Dash for trash is on right now. I wish I would actually notice the stock. It did not participate in yesterday's rally, maybe because people were nervous into the print. Now it's like, okay, green light. So red light, green light, green light. And so they're buying it here. I'd be scared to fade it, just for the simple reason is this has been beaten down. It's crowded, maybe on the bearish side of it. I think there's room to $8. I don't know if I'm jumping in and chasing it up for that 75 cents, but if I was long it, I think that would be my target. I'm grabbing that target from the May high there back at 804. So
yep.
I think, obviously you can see this little triple top that you might look at 750. Little struggle there. And so it's not surprising it's pausing here. The question is, can it get up through there? Get up through that 725, then you start thinking about $8.
Yep. There's good job there, Triple D. There's a couple of highs here, right at 7.25. A little bit of a pause, and then you also mentioned 8, but I see another trio of highs. I bet you it's 770. So just keep them up. Good volume. It's up. It's one of these ones where I want to open up, hold $7, take out 7.25. Boom, boom, boom. Just keep on going. So that's what
the dogs out.
I could get rid of this 1981 line that was support. But yeah, SoFi on the move today.
Who let the dogs out, right? Let's go towards another one. I see the chat wanted to talk about Airbnb, so let's take a look at that earnings. They did do. They announced a 2 billion share buyback program, as we continue to see that as being one of the trends. And the EPS coming in here at 56 cents, beating the 44-cent estimate. Sales at 2.1 billion, missing the 2.11 billion estimate there. So missing just slightly there, but Airbnb not looking too bad.
It's the kind of stock they'll buy on the dip. So if we go into this dip buy, and again, there's always the risk of a China rug pull here. It's an imminent risk, which could happen anytime. We don't know the timing of that. But if we're going to continue to climb the wall of worry, I think Airbnb is a stock that they will come and buy the dip on. So, and it's a stock that I've actually wanted in my portfolio, but it's this valuation again. I'm You know me, I'm a value stock guy. If you listen to the show for more than 2 weeks, you know I'm a value guy. So it's been a tough, but I think I've said before, I think Airbnb can eventually grow into their valuation. I think this is, where we look at this, and obviously there's going to have to be some, reinvention. You can't, there's going to have to, there's going to be competition. I mean, just like it was for Uber, it was Lyft. I mean, there is competition already, but I do think Airbnb is in a good spot. I do think that they're a good run company. I do think people are coming by the dip.
It looks like you've bounced so far off the pre-market low.
They already have kind of.
Yeah, they've already bought the dip, 103.34 on the dailies. Yeah, if you stuck your head out if it really started going into decline, I really wanted this today, either cover short. I'd throw something out there at 104. I think you're not going to get it, but then if you're looking for more of a rebound on the upside, you got to get through 110. People that scooped it up on a discount, say, hey, I'll flip it out at 110, take my $3-4 bucks. So there's some parameters for Airbnb. All right, Mitch, I'm going to hop out of here.
All right.
Yeah, just give
I'm going to wrap on up here, guys. Like always, definitely check on out, guys. You guys can still go to it, premarketprep.com. You don't want to miss it. August 18th from 12 to 3 p.m. Eastern. 3 hours with Joel Elconin, Dennis Dick, and Rob Friesen. Go to premarketprep.com. Use the PMPP10 discount to go ahead and get your 10% discount there. And Dennis, we'll see what happens in this market. It's going to be fun, right?
It is, and again, I wouldn't be surprised, like right now, Bullard just talked for an hour and a half. The market did not sell off. They're not that scared of the Fed talk. He was on an hour and a half. He was on CNBC there. It's either through the interview, they're on to Kramer here. And the market actually rallied during that interview. The one worry I have, again, I'll say this, if I wasn't so worried about the China situation, maybe I'm being, maybe I shouldn't be worried about it, but I am. If I wasn't so worried, I would be buying a lot more stocks right now, but I am worried about it. We've come a long ways. I just think it's still prudent to take. I've been saying this for a week. The SPY really hasn't moved anywhere since I've said it, since I started taking profits. And the only problem is we've added a whole new can of worms here with this whole China situation. So I just think it's prudent to take profits here. That's all. And I might be wrong, and we may have more room. I do think there's still room to 420, but I don't want to stick around with the China risk. It's always about risk assessment, risk reward. I just see an increased risk here right now, and that's why I move to the sidelines as much as I can.
It's always about that, right? Risk assessment first, then we worry about the reward. If we can worry about our risk, we'll probably get a reward. But let's go ahead. Let's get out of here. You have a great one, Dennis. Have a great trading day. Let's continue going with live trading that will be coming on next. Lord Ryan, Zunaid, and I want to continue on going with the way that we've been doing it. We killed yesterday multiple of those big runners, AMTD, Triple BY. I was working on some trades also, so I got some swing trades to talk about. We got a lot of earnings stocks to cover also. We weren't able to cover them all, so I'm going to go on over to live trading and at least cover 5 or 6 more earning reports. So if you guys want to come on over, maybe hear about Starbucks, maybe hear about EA, Under Armour, CVS, Moderna. I'm going to keep watch on these stocks. So come on over to live trading and let's go talk about some of those earnings.